Entering the world of cryptocurrency trading can be both exciting and intimidating for beginners. With thousands of coins, constant market fluctuations, and new strategies emerging every day, it's easy to get overwhelmed. However, building a solid foundation is the key to long-term success. The first step for any beginner is understanding the core differences between trading and investing. While investing often focuses on long-term growth and holding assets, trading requires a more active approach, buying low, selling high, and taking advantage of short-term price movements. Developing a trader's mindset requires patience, discipline, and continuous learning. One of the most essential strategies for new traders is buy and hold, also known as HODLing in crypto slang. This approach involves purchasing a promising cryptocurrency and holding it for an extended period regardless of market volatility. Bitcoin and Ethereum are the most common assets for this strategy due to their long-term growth potential. This method reduces the need for constant monitoring and emotional decision-making. However, it's important to research thoroughly and only invest in projects with strong fundamentals, active development teams, and real-world use cases. HODLing may not bring quick profits, but it protects you from making impulsive moves during market crashes. Another beginner-friendly strategy is dollar-cost averaging, DCA. This involves investing a fixed amount of money at regular intervals, weekly, monthly, or even daily, regardless of the asset's price. Over time, DCA smooths out the effects of volatility by spreading your entry points across multiple prices. This reduces the risk of buying at market peaks and helps build a position gradually. For beginners without deep technical knowledge or market timing skills, DCA is one of the safest ways to enter crypto. It's especially effective during bear markets when fear dominates and prices are low, setting up for long-term upside. Once comfortable with basic strategies, beginners can explore swing trading, a medium-term technique that involves capturing price swings over several days or weeks. Unlike day trading, swing traders don't need to monitor charts all day but still benefit from short-term trends. Technical indicators like moving averages, RSI, Relative Strength Index, and MACD can help identify entry and exit points. Swing trading requires practice and emotional control, knowing when to take profits or cut losses. Beginners should always use stop-loss orders to manage risk and avoid overtrading. Keeping a journal to record trades and learn from mistakes is highly recommended at this stage. For those ready to be more hands-on, Scalping offers a high-frequency trading style that involves making dozens or even hundreds of small trades in a single day. Scalpers capitalize on small price movements, often using 1-minute or 5-minute charts. While this strategy can be profitable, it demands intense focus, fast decision-making, and advanced technical analysis. It's not ideal for complete beginners due to the high emotional and financial risk. However, learning the principles behind scalping, such as tight stop losses and timing, can give beginners insight into market micro-behavior. Simulated or paper trading is recommended before attempting this strategy with real capital. Risk management is the backbone of all successful trading strategies. Beginners often overlook this crucial aspect in the excitement of potential profits. Always use stop-loss and take profit orders. Never invest more than you can afford to lose, and diversify across multiple assets to reduce risk. Understanding your own risk tolerance is key. Some traders are comfortable with volatile assets like meme coins, while others prefer the stability of blue-chip cryptos. Tools like position sizing calculators, portfolio trackers, and trading bots can help beginners automate risk management and reduce human error. Remember, protecting your capital is more important than chasing every opportunity. Lastly, never underestimate the power of education and community. The crypto space moves fast, and staying informed is critical. Follow trusted sources on Twitter, YouTube, and crypto forums like Reddit and CoinMarketCap. Join Telegram and Discord groups focused on learning, not hype. Many scams and rug pulls target beginners, so staying skeptical and asking questions is healthy. Use demo trading accounts on platforms like Binance or Bybit to practice strategies without risk. Above all, maintain emotional discipline. Avoid FOMO, fear of missing out. Don't panic sell, and never let greed dictate your moves. Consistency and education will always outperform luck.